Yo, what up? Welcome back to Stock Market Mindset with Slick the Trader. Uh, yeah, we about to go over this trade I took and gave it out in the Telegram for free. If you ain't in the Telegram, please join the Telegram. The link to the Telegram will be in the description of this video, and it's in like my profile about section on this YouTube. Totally free. I'm not asking for no money. If you want to give donations, the Cash App and all that's there. But because I do these videos for free because, well, I ain't monetized, and I just like to help and teach people. Cool. Uh, at this present moment, Pittsburgh versus Indiana game is on. It's getting pretty good. 24 seconds left. Anyway, so you might hear it in the background. So, also, please like and subscribe. So, I gave this QQQ trade out. I sent it out to the team, and we banked pretty hard on it. If you took this trade, what I'm going to do, I'm going to break down why I took the trade, why I sent the trade out, and why I stayed in the trade until it developed, and getting comfortable with being in trades when they don't just go instantly green for you all the time, and just knowing when to get out and when to take profit, right? Okay, so what we had was a gap up in the morning, pushed up, took out some highs. Good. It's a broad information somewhere in here. I don't have it marked, but I kind of can see things. That's just something comes with time in the market. And what I do is when I got a gap up like that, and I'm looking at time frame continuity, I'm looking at the gap up, I'm looking at the type of candles that we get. So at the time we had the daily, all of this was green at the time, right? I used this indicator called right here. I don't use a bunch of indicators, mostly just ones for the Strat. It's called Strat Candles Open Levels and Active FTC, which is time frame continuity, and let you know what time frame will go green or red depending on where price is at, and it just kind of gives you that mark. So you got a visual. It's a pretty simple indicator. Check it out. It's on TradingView. Strat candles plus open levels and active FTC. So as you can see, the daily went red right below here, right below the actual entry for calls, but we'll talk about that later. Right. Obviously the weekly's green because we're well above it. Uh the 15 and the 60 because we were well above it. So all of this was green at the time. So most people will say, oh, well, shit, all the time frames are green, we're probably going to push high. So first 15 minutes of the market, but as you can see, that's what we opened at. Pushed up, going with green. So we're looking for two things, either for it to gap and go, right? And push up, take out some more highs, maybe reject it at this broad information, or we looking for what we got. Boom. So that's why I like to wait the first 15 to 30. We got these gap ups, market open, pops up, take out stops, people taking profit, all types of things that happen in that first 15 minutes. Got to get time, market time to settle and figure out what it wants to do. So that's what you're either looking for. If you don't understand how to trade morning gap ups and gap and craps, I got a video on that. I'll try to pin it in this video. So if not, just go through my page. So that's what we got. I normally mark my high and my low. I'll check out the 30 and the 15 and see. As you can see, we got the same thing. You just would have got a later entry. You would have entered hit down here instead of a little higher. So with this trade, I had two things I could do. And what happened was you'll see getting in a little earlier on the 15 created some redness in the beginning of the trade, but I never went above 20% negative on this trade. So what I do, I wait around the first 15-minute candle open. Boom, we had this big two up. Know what a two up is in a strat? Cool. If you don't, check out my other videos on what these numbers mean if you don't trade the strat. So, boom, first 15 minutes open, we didn't push up. And this candle went completely red and we broke this level. When we broke this level, I entered. When I entered here, as you can see, it's about 9:45. Well, actually, I entered at 10. I entered at 10. I entered at 10. I sent it out at 9:49. So boom, we got this two down. It messed around. I entered when it broke here. We popped back up and bounced around for a little bit, right? So now we're about 30 minutes into the market. And this is the same thing you get, right? Boom, you would have entered right here and it's break. And what we did was we fell through. Boom. And you can see we got some wicking. So it pushed up, but we got a 222 continuation all the way down, right? And then we got a boom, big drop. Stops hit, sellers, buyers getting out, sellers taking over, right? time frame continuity, boom, shifts to the downside. And that is what I seen. Now, when I always tell y'all I have multiple strategies and multiple different things in my playbook that I use. That's why I said learn the strat first is like price action on training wheels, and then get more advanced into ITC and smart concepts and all those other price action things. It just makes things so much easier to understand once you have a basic understanding of price action, which the strat helps you with. Strat is so simple that it allows you to understand everything else that's just a little more complicated. That becomes easy. All right. So I'm going to turn on this fair value gaps nephew Sam. So when I got in this trade, my thing was, okay, I'm in, right? Now it's time to be careful, right? I knew what my stop was going to be, right? My stop for this trade actually was going to be about 50% above this candle out. My stop could have been up here, right? If I wanted to give it more risk and more room, right? But that would have probably made me somewhere around net 50% negative, which I don't want to ever really go, right? And just saying if it rejected up here. So my reason for 50% would have been, right, 50% of this candle. If we retraced more than 50% of this candle, I was pretty sure we was going to push back up and continue through, right? So what I do is I take my fib level and my Fibonacci level, and I just take everything out, and I just leave the, top and the bottom, 100% and the 0%, and then the 50% mark, which is a blue line. So it let me know. So this was my stop here, right? Even though I didn't have it marked, right? So once I entered, I know if we pop back up anywhere past here, I was out, right? And what we did was we just continued on down. Now, when I say having multiple strategies is good, and at the same time you can use them in conjunction, like with FTC and with ITC and different things like that. But we had these fair value gaps, and what I like about Nephew Sam's fair value gaps, they tell you what time frame these fair value gaps are, right? You see it says 15-minute here, and they overlap, and an hour here or 4 hour here, and different things like that. Then you have a bearish fair value gap here on a 15-minute, different things like that. So that's what made this trade, wick the way it did and finally get some follow throughs, because you had those imbalances that wanted to come down and fill, but at the same time, it was still bullish on these higher time frames, right? And if they pop up, and as you can notice, when we got down here to like this hour and 4 hour, as you can see, that's where we got a bounce, right? Because it wanted to fill those imbalances, right? And if you don't know about fair value gaps, there's all types of videos on YouTube. I haven't really made a lot because I try to keep my channel strictly about the strat for this moment, but I'm going to start to slowly incorporate that into my channel. So that being said, and we can go and check out the 4 hour too, and you can see, when we came down from the entry, and boom, that's where we got the bounces from, right? And as you can see, we ended in a 3-1, and then, that's a nirvana, and then boom, we came on down and took out that level, right? So let's get back to the 15. So while I was in this trade, I was really managing my risk because I knew we had these fair value gaps, and I didn't know if we were exactly going to push all the way down or maybe get some type of reaction in these fair value gaps as I was, trading. But it's a pretty big fair value gap. And as you can see, we came to the bottom of here. And when we got to the bottom of these fair value gaps, we rejected with a hammer, shoot a candle, 2 down, and boom, we pushed back up and basically took out this fair value gap and continued back down, right? It rejected right there, and that fair value gap came, filled out those imbalances, right? As you can see, look how that 3 candle filled out that imbalance, and we continued back down for the day. So while I was in this trade, I was slowly taking profit as we got, bounces and moving my stops down as I was going. And then boom, we flushed down and actually took out this weekly level here, right? And filled that gap basically completely by maybe like a couple cent, probably about 50 cents here, as you can see. But this was my actual first PT was here. Almost made it. That's why I say, look, take your profit when you get close or pretty close to your PT. Because if I had actually waited for this to touch or hit, quite possibly, I could have actually lost out. And actually, if you see it push back up, which who would want to lose that type of profit when you've made such profit so quickly down here? And we pushed up, filled that imbalance, and came back down. And we did basically take out that area. So I could have stayed in this trade from 10 o'clock and just let it do its thing and, have my stop here, move my stop here to break even, or maybe even here and the profit, right? And since we never came and took it out, And, I could have continued and stayed all the way in it until 2:30, right? Been in this all day, but I mean, look, we basically took out and came down and basically took out most of that at 10:45, like, like an hour trade. So, I mean, it all depends on how you want to do in your confidence, or you can leave runners to the left or stop here and let this thing just rock out and see what happened for the rest of the day, right? Contracts could have got ate up. It all depends on if you had 0 days or whatever. Personally, I traded 0 days this day. So going down in the 2 o'clock, past like 1 o'clock with 0 days, you don't want to, it can get a little messy when you've been in all morning, right? Especially with the up and down movement. So we came through, filled this gap, pushed right through this fair value gap. And as you can see, like I was saying, your bounce was right here. And they basically rejected this FVG, and which is a fair value gap, and continued to push down, bounced off this one, continued to push down. But I just wanted to show like what was the reason why I took it. Gaps don't always get filled, but most of the time they do. And we pushed up, two up, and two continuation on down. And that would make me get in it. So when I say sometimes mixing strategies isn't good for a beginner, because if you've seen this and you're trying to use fair value gaps and learn the strat at the same time, you just say, oh, that's a big bullish fair value gap. I ain't getting in. I personally know what I know because I trust the strat first, and then everything else is secondary, right? And I'm looking for the strat to work out, and then I'm just looking for these things to see where we might bounce and reject, right? So that's my reason for using ICT, pieces of ICT with the strat, but mainly relying on the strat, and that's my main trading strategy. So not to confuse anybody, we're going to turn this off and look at that. I mean, we entered here, right, entered here when we got the break of here, right, when we wick down. And I seen this wick down, and I was like, all right, let me see if we bounce back up. And then, I took entry about here at 10 o'clock, right? And we came on down. I was taking profit along the way, and I had some runners. And I think I sold most, like somewhere in here. I think I even say in the Telegram, um, man, I sold too early. That's actually what I said. And let me see if I can share my let me see if I can share my what's the name really, really fast. And see if I can show y'all the Telegram. Let me see really, really quickly. Okay, so let me see if I can switch this off and show you really, really quickly. Oh, here we go. How do I share two at the same time? Let me see. Let me see if it'll allow me to do it. Cool. So this is the Telegram, right? Stock market mindset. We got 58 people in here. All right, let me get down here to where we was at. So to show you not joking, and it is free. Right. All right. So and we'll get into this BAC trade. I'll make another video about that. I sent this out, but I said I'm going in the QQQ 490 put small, taking a small position. Wasn't going too heavy. The reason I wasn't going too heavy is because I seen that big fair value gap. So I said, let me manage my risk. Right. All right. I got in at 93, 0 day to expiration. Right. Just so everybody knew. And I told all of this at now 49. And then I sent out the charts, right? So you probably can see this is me sending out the charts and what I seen. And I said, we are basically into that. We're into the gap now. We falling into the gap. We came on down, right? And I say selling most QQQ here, right? And I said I'm leaving runners 36%, right? 40%. And it's just started moving 55%. Move stops or take profit if you really got a really small account, 93 to 160, 70%. And they hit $180 from a $93. So that was like over 90%. Then it went from 93 to 200, right? And then we hit 130. And then I put a stop on my runners at 10%. And I say it was a beautiful trade, two trades. And, I just kind of took profit too early. And then I said here, those contracts filled and went to $415 per contract. And yeah, I hate to say it, we sold early, but I never like to look back. But I mean, that's impossible not to think about that. So Yeah, that's the Telegram. If anybody want to get in it, I will make sure I put in the link. And then the next day, that Friday, I let people know there was an inside day on futures, and we did it go two down on NQ, but it basically was a quarterly sweep, and it just wasn't a good day to trade. So I kind of warn people in the morning what I see, and let them know that I might not be sending out alerts this particular day, or don't look, if if you're trading on your own, just be careful. So that is that, and let me go back to QQQ chart. So yeah, that is basically it. That's why I took that trade. I mean, we had a gap up, gap and crap, came down, filled the gap, bounced off on some fair value gaps, right? And as you can see, we had this bearish fair value gap. We came, filled this imbalance right here, did a 3, 3, 1, another three, and we continued on down. So I mean, it was some trades in between here late in the day, but this was the big money maker right here. I mean, look at that. We entered this trade at 10:50 by 10:45. I mean at 10 o'clock basically, and by 10:45 you could have been out and on with your day. It's a 45-minute work day. If you had one contract and you held it all the way through, you would have basically made almost $300. Obviously, if you had a couple and you took profit along the way, I mean, you could have easily made $1,000 or more just having you know risk, a full $200, $300, right? Maybe like $300. And if you had held it in full and came all the way down, you'd have been somewhere around about $1,200. Um, Trading just three contracts, risking $300. So that's my thing, like finding good contracts at cheap prices and, being able to actually get in good trades, quality trades, A+ setups that gain high percentages without risking a lot of money, right? That is the key to winning in this game. You don't need 50, 100 contracts, when you got a small account, right? You got $5,000 and you full ported. Yeah, you would have made a ton of money, but you also would have been risking a lot because let's just say we got in this gap and this decided to reverse hard with a hard candle. You'd have lost 50 to 70% in a matter of, a candle, right? And it can happen. It's happened to me in my beginner time, especially not having like hard stop losses and stuff like that. So that's always my goal is to manage risk, not go crazy, and take A+ setups with smaller size and get big amount of contract, high amount quantity, amount of contracts gains, if that makes sense. But listen, I ain't trying to make this video too long. I'm gonna send a link to the Telegram. I got a link to my course, everything like that, and I'm trying to push out a bunch more content for this channel. We're almost like 5 subscribers away from 500. I'd like to hit that 500 mark to hit that 1,000 subscriber mark. So please like, subscribe, share with your friends. Contact me by using those contacts in my link tree, which all of them are there. And contact me if you need some help. The course is really cheap, like $32, $35. I can't even remember. I don't really go on that much. I just load content on, and I continue to add content to the course. And if you need any help, any one-on-ones, I do that too, really cheap. I'm just here to help the community. Rob Smith basically gave this game out for free, and I'm trying my best to keep it going, right? Because the strat is just so simple. So thanks for watching. I will be pushing out more content. Meet you in the Telegram.